Good morning, good afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you're new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space. And further afield, we like to look at the kind of macro situation that we're in and other markets to help us kind of correlate where our small but exceptionally significant market is heading. And of course, I'm talking about the crypto space. This is a space, ladies and gentlemen, that is just over $1 trillion in terms of market value that is going to go into the tens of trillions. And on this channel, we are absolutely dedicated to making sure that you guys are all on that journey with me. So that's what we're going to be doing in this video. We're going to be starting things off with looking at, of course, the CPI yesterday, and more importantly, how this has affected rate pricing and, of course, the markets. And we'll be doing a dive on that. You guys will know that we officially launched our allincrypto.com website, which we'd really appreciate the support on, where we, not only with this YouTube channel, also via a website version for some of you guys that are on the move, are going to try and keep you up to date with the latest and greatest things happening. So we'll be looking at the question, is the Fed done with rate hikes? And then we'll be looking, in doing this, at obviously the CPI yesterday, core CPI, Fed rate pricing, and a number of other things. And then we'll, of course, move on to the Bitcoin chart. How is Rektember going so far? Well, it's been a green month thus far. We did say that, okay, September's typically a bad month, but so there's other months. I think March is one, and January typically aren't the best months. They were both green months for Bitcoin, so it doesn't have to be a bad month. And ultimately, I think going into October, November, you're going to have a pretty awesome time for the crypto space. I wouldn't penny pinch here. So we're going to be covering quite a bit of macro, going into a little bit of AI, and really it's going to be quite a macro data-driven daily market update. So if that sounds good, guys, strap yourselves in. We are going to start things off with, of course, the events that took place yesterday, and that was indeed the CPI. I'll leave a link to this article in the description, guys. We also have an AI bot that will read it out to you if you don't want to, or you're not a big fan of reading like myself, being dyslexic, although it's something that, you know, I've kind of had to learn to love begrudgingly. So are the Fed done? Well, yesterday we had a 3.7 print in CPI. The forecast was 3.6, so it overshot by 0.1%. We know that oil, moving away from the Bitcoin chart, we'll get off the monthly just to show it a little bit more clearly, is doing rather well. Now, there's a good and bad side to this, because the bad side is, of course, okay, well, inflation's the main driver of monetary policy. It's the main mandate, price stability. The Fed has basically caused 2022 through, and the deflation we've seen thus far through rate hikes, bringing demand in line with supply. You know, that's what they've tried to do. It's the whole point of quantitative tightening. Now, if this goes up and inflation starts to pop its head, it calls for further rate hikes. But despite the print yesterday, if you look at the Fed pricing, it's 97% no hike on the 20th of September and a 3% chance that they hike. So this is very likely. It's very likely that they're not going to hike. We actually had word from JPMorgan. JPMorgan said today they think the Fed is done with rate hikes and will pause next week. I happen to agree. I think the markets are showing us that. On the topic of oil going up has quite a negative connotation for the equity market, given the response to it going up. However, historically, oil and the equity market have been very much in sync, and we're getting a lot better than expected data. I did an amazing update for the Patreons, and we'll definitely take some snippets out of that and put it on the YouTube channel, where we look at the kind of macro situation. We looked at oil, and we actually, you know, oil is, I think a lot more people are considering a soft landing probable. And I think it's going to be a soft landing that leads to a shitstorm. You know, I think you're in 2006 right now, and 2008 is potentially around about the same kind of time period away. But I think that, you know, it will come when this kind of soft landing narrative, oh, things look okay, and then something happens. I don't think that happens for a good while. But oil going up, actually, historically, has had quite a positive correlation with the stock market going up, which is interesting and kind of reflective of the better than expected data you're getting across the board. A TikTok video of somebody upset about the house of the kind of cost of living crisis. That's not a good representation of the overall mood of things, and that's looking at the individual and not the whole. And I think this is why people get very concerned about things, where if you look at the data that you're getting, I mean, Jerome Powell even said it at his Jackson Hole speech, it's a lot better than expected. And actually, we have forecast this given the correlation between rates and perhaps the markets. So yesterday's CPI was interesting because, yeah, you got a higher CPI print, but you got a lower core CPI print. Some argue the Fed watched the core CPI more so. This could be why rates haven't actually adjusted. This came in at 4.3. The prime was 4.7. And you can see you've got continued deflation in this area. There are certain areas where you're continuing to see deflation. There are certain areas where things are kind of raising their head. So something to watch. The other thing to watch, of course, is the 2-year yields, which lead the Fed funds rate. A lot of your crypto kind of channels really don't understand a lot of this stuff, and we've made it our business to understand it. You know, if this goes higher, rates are likely going to go higher. And you can see right now they're kind of plateauing almost, which is kind of the fashion that they do things in. So we'll see. We're going to be watching and keeping you up to date on this channel. Do check out the website and the article in the link with a link in the description to come and stay up to date via a website format. You've got to remember with monetary policy as well, it is transitory. This was a great study that we looked at. We collected 67 published studies and examined when price bottoms out after a monetary contraction. It then talks about the laggard effects, which they say in a developed economy is between 25 and 50 months, and in a less developed economy between 10 and 20 months. So we think, you know, you've got that sort of 25-month from probably when they stop rates period. It could be a little bit less, and then you're going to get that 2008. We've done lots of looking into this. The interesting thing with rates, again, is the ECB, European Central Bank, has set to pause today. Going back to this article again, and then we'll leave it alone, guys. You did have the Canadian bank, you did have the Australian bank, and now the ECB all looking to pause. But they're kind of putting a slant at this, that it's a hawkish pause, and their reasons for backing off are more to do with their GDP doesn't look as hot as the likes of the United States. UK GDP came out yesterday, which was slightly negative for the month on month. You will see a slowing down in things as rates do catch up, but for the moment, they don't look too bad. Today, you've got PPIs, you've got core PPIs, you've got an ECB press conference, you've got a natural gas storage. So there's going to be quite a lot of inflationary and kind of dollar-based things happening here. We did speculate on the dollar running into a point where it's likely going to face resistance. It's had a great run. This doesn't mean that the run's over. It just means that, you know, it's likely to rest for a little bit before potentially continuing, if that is now the direction it wants to go in, and this is a stage one breakout. You have now taken this resistance out, so we are treating it as that for now. We should probably do some volume profiles on other markets. Very interesting that it's not taken out highs against the euro or the pound, but that's for another video. Bitcoin crypto. Now we've covered quite a bit of the macro. It's not been a bad month, to be honest. And actually, it's kind of following the path that we would like it to for our bullish scenario. And that is that, you know, you're getting this kind of indecision here. You've clearly got buyers coming in. This is really what I want to see. I wouldn't even mind if it sold off a little bit more for this month, setting up for, essentially setting up for October, November into the run to the end of the year. We've got that Christmas rally. It looks very similar to totally different context, you know, back here, where you actually didn't even manage to take that low out. And I think you're going to set up in a very similar sort of structure to me. This is what I want to kind of see moving forwards. And then back end of September, we get the ball rolling. There are a number of things, number of different markets that correlate with the cryptocurrency market that actually look pretty good. You know, we are mid to long term bulls. We've been bullish since down here. It's all on YouTube. Very good call. But short term, we've kind of expressed a little bit of indecision, and I think we've been right on that. And I think actually, if you look at the price action that we've got, we've been right on that. I think this is going to turn to the upside. I just think it's a matter of time. You know, you've got a lot fundamentally happening with ETFs and everything in between. You know, altcoins will catch up. The majority of your altcoins, we would say, are in or forming potentially a stage one base consolidation, ready for a similar market to what you had over here. And if you're accumulating in any kind of a bottom of a crypto, cycle, it's going to be very volatile. Just to show you that, this was a rally of 246%, down 60. Risk management, I think people try and apply traditional risk management to the crypto space. I just don't think it quite works like that, because your traditional risk management would have you in, out, taking haircuts consistently. There's a kind of niche and a nuance that needs to be applied. So that is really all we've got for you guys. We'll keep you up to date. We've continued to reiterate the fact that we're accumulating altcoins, even though we are concealing what altcoins, although we talk about a lot of them on the channel, behind a Patreon wall. We ultimately think that now is quite a good buying opportunity. Now, that is not financial advice, just my own opinion. Whether we'll be right or not is still to be seen. I think we made some great calls this year, and long may they continue. Will we? Can we be right? Wrong? Absolutely. But we will see. It's very interesting that the FTX news came out. I mean, Solana's kind of somewhat recovering a little bit. We'll see how this all affects the market. But yeah, that's really all I've got for you guys. If you've enjoyed the content, like as always, appreciate it. So as a comment, don't forget to come and check the website out and stay up to date via the website as well as the channel. And on that note, I'm going to love and leave you. Thanks for watching, guys. See you in the next.